morning. You're watching Business World Live. I'm Danie, Laurel.
And I'm Jess Delos Santos. It's the start of a new trading day, but first, let's go straight to our top story. Inflation accelerated to 2.5% in October. That's from 2.3% in September. National statistician Dennis Mapa said an uptick in prices of food, such as meat and fish products, as well as non-alcoholic beverages, was the major contributor to the October reading. Meanwhile, more on the trade figures that we broke yesterday. Merchandise exports rose 2.2% to over $6 billion in September, following a contraction of 12.8% in August. The latest figures show that exports snapped a 6-month losing streak, even as imports declined by 16.5%. The fall in imports was, however, lower than the 21.3% contraction in August. Trade deficit stood at $1.71 billion, smaller than the shortfall of $3.41 billion in the same month last year. Security Bank Chief Economist Robert Dan Roses said Philippine trade likely benefited from improved global trade, with China's recovery lifting trade prospects. China remained the Philippines' largest trade partner in September. Now, just a quick update on the U.S. presidential race. Biden is still leading now with 243 electoral votes over Trump's 214 electoral votes. That at least is according to the latest poll of Reuters. Now, vote counting is still ongoing in crucial swing states. But earlier, before broadcast, we did see Michigan flip to blue. Biden there winning by a narrow margin of 2.7 million votes. Trump, meanwhile, is alleging fraud in the elections and sought a recount of ballots in Wisconsin, which swung last night to the Democrats. The state has 10 electoral votes and is so far still leaning blue. We're still waiting for the final results in key states like Pennsylvania, North Carolina, and Georgia, all of which are currently leaning red. And recall, these are states Trump won back in 2016. So we'll see if he does get the needed electoral votes from these states in time. Now, Nevada and Arizona so far still in blue, but still have a bit of ways to go in vote counting. In fact, if you try to take a look at the other outlets, some are already reporting 253 electoral votes for Biden, some 264. But really, what's going to be crucial here is going to be Nevada. That may just be what's going to put Biden in the White House. Nevada has 6 electoral votes. And so far as we speak, Nevada, Biden is only up by as much as 0.6% in that state. So let's see if how things are going to fare, at least voting wise, vote counting wise in Nevada. Now, should Biden secure the 2 plus Wisconsin, the U.S. will actually have a new president, and red-leaning North Carolina and Georgia, however, are closer to wrapping up their vote count. If realized, this would give Trump 31 electoral votes in total to take the lead in the race to 217. Now, and all attention seems to be on the U.S. presidential elections, but business managers have their eyes set on recovery. Of course, business as usual. Break down the latest earnings for us.
Exactly. So, these things are getting lost in the mud, but, a lot of attention nevertheless. Let's kick off with MPIC. Now, they have actually reported their 9-month net income at 5.01 billion pesos. That's down a hefty 58% year on year. But what they're trying to highlight in their report is that the third quarter net income improved quarter on quarter. Okay, so that's to 2.4 billion pesos versus second quarter, which was 1.9 billion pesos. Now, what is Joey Lim, which is the president of MPIC, saying? It's really because of the traffic at toll roads. Now, if you've been driving around, just you'll see that parang walang pandemic, parang dami pa ring taong pupuntang wherever they want, diba? It's very, very traffic. And he says that, get this, it's already right now at to 85% of 2019 level. So, despite the fact that NCR is still under loose quarantine restrictions, the traffic in toll roads is 85% na. And that's what he's saying. But in the case of their power and water businesses, the volumes are still starting to recover there. Now, because of this, they're saying they aspire to see the earnings return to 2019 levels by 2022. So still a couple of years there. But that is according to their CFO, David Nicol. So he's keeping their 10 billion peso core profit forecast this year, which is nevertheless down from 15.6 billion pesos in 2019. Another thing that they say will be improving is the revenues that they're going to get from the railways. So they're waiting for the government to allow more ridership. And you can see MPIC enjoying a bit of euphoria here. That's up by 1.2% to just above 4 pesos. So it seems we haven't really broken this level of 4 pesos in quite a while now. Let's take a quick peek at SMIC naman. This is, of course, the conglomerate that owns BDO and, of course, China Bank and all of the SM malls. We have already reported SM Prime earnings and BDO earnings. And the conglomerate is reporting a net income of the 9 months at 15.2 billion pesos. That is down 54%. And they are saying that, of course, this is on the back of a lot of issues here. But they did mention, same as MPIC, that the third quarter revenue improved by 36% quarter on quarter when you compare it to the second quarter. And in fact, the third quarter revenue versus last year was actually 36% up. That's close to 101 billion pesos that's in revenues. And so it's not such a bad thing. They're saying, though, that the quarter-on-quarter results are encouraging, but the company is remaining watchful of the underlying demand. They're continuing to face headwinds. So you can see on your screens here, what is the mix that's going on here? Recall, BDO is contributing 50% to SMIC's earnings, and they reported net income down 48%. And that was mainly due to the provisions and loan losses that they were anticipating already. This, however, was offset by the fact, very interestingly, that China Bank's net income grew naman by 23%. So a bit of an offset there. But when it comes to the property segment, they did report a 48% decline in the income, mainly because, of course, of the revenues in the malls that dropped by 57%. Now, if you talk about the retail mismo, that actually dropped by 73% in compared to the same period of last year. SM not really enjoying a bump up here. That's down by 0.4%. I've also got Icpsi for you. So a lot of eyes on this company because it deals a lot with ports, abroad as well. So it's not just a Philippine-based company. It's all over the world. They've actually reported a third quarter revenue up 6.7% year on year. Very interesting. Year on year, so compared to 2019, that's at $379.3 million dollars of revenues, and their net income was actually up 23% year on year. So, very interesting points here. And they are saying that there's improved global trade, diversified portfolio, and a lot of cost cutting that they did. This is according to their chairman, Enrique Razon, and that's behind the earnings. But they are remaining cautious. Recall that they have also slashed their capex plans. They're continuing to present uncertainties, and they're mindful of second lockdowns. And finally, let's take a quick peek at FB, which is, of course, San Miguel's food and beverage arm, and how the consumption is going there. Now, the 9 month net income, not such a pretty picture. That dropped 14% to just a little above 194 billion pesos. But their EBITDA, so their operating income for the 9 months, was down 26% to 30.6 billion pesos. But what they're saying is that this is actually an encouraging development, given that their net income is just a little above 14 billion pa rin naman. This is according to their president and CEO, Ramon Ang. He says that because of the easing of the lockdown from June, there's been an improved mobility and boosted consumer confidence. Interestingly, Ginebra San Miguel's net income for that 9 months rose by 67% to 2.21 billion pesos. And he says a lot of better sales of beer and spirits as the liquor ban was lifted. However, you can see the stock actually performing a bit towards the downside here, trading at 63 pesos and 35 centavos, Jess.
All right, Dan, let's take a step back and take a look at the local index as a whole here. Seems to be joining the global rally as investors keep an eye on the U.S. elections. How's it opening this Thursday morning?
All right, so just as you said, I'll take a quick peek at the global equities front first because, we did report on this elections seeming to be having a clearer winner here. And that's what investors have been watching out for, diba? Not necessarily who wins, but whether this win will be clearer and when is that going to be. And it does seem to be the case. The NASDAQ up by 3.9% and the S&P 500 up by 2.2%, as of yesterday's trade over in the U.S. And if you take a look at Asia, it's enjoying also some clarity here towards the upside. So most of the Asian markets strongly in the green. And the same goes for our own local index you were mentioning. And this is following the fact that yesterday we were already gaining quite a lot. So yesterday we gained the best in Asia. We were up by more than 2%. And this was also on the back, of course, as analysts have said, apart from the U.S. elections going on, there's also the trade figures, the exports shooting up compared to the estimates that it would contract, having actually contributed to the index's gain. And you can see
Mhm.
this morning a hefty 0.7% up. We are
Wow.
back and broken through the 6,500 levels yet again. So hoping for this momentum to stay in place, Jess. Now, nevertheless, you also have some developments on the anti-money laundering, efforts of the government in terms of terrorist financing. What's the latest there?
But so this time around, you have the Securities and Exchange Commission asking companies, corporations to actually update their beneficial ownership list here. This time around, they're asking registered foreign corporations, whether they're stock or non-stock, to actually update their general information sheet, like what I mentioned, especially on beneficial owners. So first things first, what are beneficial owners? Just to give you an idea, beneficial owners are those who actually ultimately owns or controls or exercises ultimate effective control over a corporation. This apart from the legal owners of the corporation. Now, the SEC is also saying that beneficial owners include those who actually own directly or indirectly 25% of voting rights or capital of a corporation. Of those that actually exercise control over a corporation and have dominant influence over management and policies may actually be considered as well as beneficial owners. Included in the list as well, the probable beneficial owners are those who can actually elect a majority of the board of directors, as well as the probability that they can own the corporation via nominee shareholders or directors as well. What's also interesting here is that they may also act stewards of corporate properties. Now, again, the SEC actually released this memo to assist the government, especially when it comes to the implementation of the Anti-Money Laundering Act and the Terrorist Financing Prevention. Recall, of course, that we are at least hoping to not be, at least preventing, to not be included in the gray list here when it comes to money laundering.
Okay, and a lot of issues on that, especially as the banks are starting to ease in terms of the restrictions to increase the loan growth there, Jess.
Mhm.
Okay, checking in on the biggest headlines we are watching this Thursday. State spending on infrastructure plunged by 40% in September. This is the third straight month of a decline in light of budget cuts and delays in construction activities due to the ongoing quarantine restrictions. Despite this, the Budget Department announced that government agencies did reach the third quarter spending target, which was already reduced as the government tightened its belt due to the pandemic. Infrastructure and other capital outlays slid 40% to just about 57 billion pesos in September. That's from the 95 billion pesos logged a year ago. This was the fastest decline in 17 months, or since the 57% decline seen in April 2019. The September tally brought the total spending to 153 billion pesos for the third quarter. That's down 33% year on year, but 8% up from what was spent in the second quarter. Aside from construction delays due to the ongoing quarantine restrictions, the DBM is also noting the high base in 2019 when the catch-up spending plan was implemented by the DPWH following a massive delay in the budget's approval.
Energy Secretary Alfonso Cusi is urging Philippine companies to start working in the West Philippine Sea. This comes weeks after President Duterte approved the recommendation of DOE to lift the moratorium on oil exploration in the contested waters. Cusi reminds Philippine firms that they don't need approval from China to start surveying the area. The Energy Secretary explains the impending depletion of the Malampaya Reserve makes exploration in the West Philippine Sea an urgent necessity. Cusi assured that this is unlikely to affect the joint oil development discussions with Beijing. We'll have more of the economic and corporate news when Business World Live returns. Stay with us. watching Business World Live here on. Okay, once again, you're still watching Business World Live here on One News. And while Democrat Joe Biden has maintained his lead, widening the gap even further, the U.S. election is still too close to call. Now, to talk about how the race to the White House will impact the Philippines' growth path, we have Emmanuel Leyco, President of the Pamantasan ng Lungsod ng Maynila. Good morning, sir. Great to have you here with us on the show.
Good morning, Prof.
All right, sir.
Sir,
Let's
I
skip.
think you're on mute, sir. Okay.
Can you hear us, sir? All right. Okay. So first things first, maybe it would be best to ask you first honest assessment of how things are faring or how things are going in the U.S. elections. It is largely expected you have a Biden still maintaining that lead here. At the onset of the count, it was a very narrow lead, but this time around, you have him somehow widening that gap. Some reporting 246, 253, even some 264. So what's your honest assessment here, sir?
Sir, can you check your audio, please?
I believe Sir Emmanuel Leyco is trying to check on his audio at the moment. But, Dan, lots of developments here when it comes to the U.S. elections, of course. Earlier, before the broadcast, we did see Biden widening that gap. In fact, like what I mentioned earlier, some say 253, some say 264, but it's really still too close to call here. In fact, lots really hanging as well on how things will fare in the state of Nevada. The last time I checked, you have Biden just up by 0.6% there. And that, of course, carries 6 electoral votes. Now, should he win that together with the likes of Arizona and Michigan, once that's confirmed, then that is ultimately going to mean 270 electoral votes for a Biden. So really, lots of things. A moment of anticipation here, really, when we're talking about the U.S. election. Okay, I believe Sir is already back with us. Good morning, Sir Emmanuel Leyco of the Pamantasan ng Lungsod ng Maynila. Sir, can you hear us?
Yes, I can hear you. I am sorry about the earlier.
No problem, sir. It happens.
Too many buttons to push.
Well, talking about buttons to push here, let's talk about how the U.S. elections is faring at the moment. What's your honest assessment?
If we are to believe the polls going into these elections, a Biden win is not a surprise. But what is really surprising is how President Trump is holding up. And this is really going to be a concern for everybody. First, deeply divided American electorate is very much evident now. Going into the next administration, the problem would be for Biden to reunite the American people. And I think that is going to be a going concern, not only for American politics, but also for the American society as a whole. There are a number of issues that divide them now: racism, the Black Lives Matter, and then we have the white supremacists, right wing. It's deeply divided, and I think that should be the first order of business for whoever wins these elections.
And at the same time, the race to the White House is actually an impact, a repercussion beyond the U.S. Of course, we're talking about how it's going to affect global relations and even economically how things will fare for the likes of the Philippines. So what would a Biden or a Trump presidency actually mean for the growth path of the country here, especially when we're talking about that? You have, for the past few years, the Philippines has seen a pivot to China, and somehow there has been a more friendlier tie between Duterte and Trump compared to the likes of former U.S. President Barack Obama. So should Biden win, would that also mean a more souring relation with the U.S.?
I don't think so. I see the U.S. foreign policy more of a structured, institutionalized foreign policy, that it doesn't matter whether the president is a Democrat or a president is a Republican. I think the American interests are well defined, and that is what's guiding U.S. foreign policy. So, for example, in the Philippines, the interest of the U.S. is very clear. They want to maintain very strong relations with Philippines in terms of trade, in terms of security, in terms of cultural ties. And did that change during the Trump administration? I don't think so. The Trump presidency is more of a characteristic, it's more of a presidency that reflected the character of the president. But did it change the ideology of the American president? I did not think so. I do not think so.
Sir, but jumping off on the point of Jess, stimulus is the main issue here, especially when it comes to global trade. So if you have a sure ball $2 trillion stimulus, if the Senate is democratically led, then that could lead to a huge impact on the GDP of the US, which could actually have, more on the demand side, for example, on our trade. Does that have an impact on our own industries, for example, where US is one of our biggest export partners?
Yes. I think the impact of the stimulus in the U.S. would be to strengthen its consumption, and therefore exports from the Philippines will have a better market, and therefore our factories, our industries will stand a better chance. However, the stimulus package has always been the bone of contention among the politicians in the U.S. The question is whether or not they will have enough to sustain the stimulus. They've been spending so much, but look, the U.S. economy grew in the last quarter. And I think that is what was not missed by many of the Trump supporters, that despite the pandemic, they were able to turn around. And I was really surprised that the Trump campaign, that the Trump performance in these elections really did a very strong showing. And I think in terms of the president's recent performance, that was not missed by many of his supporters.
Okay, sir. Speaking of fiscal policy, let's focus domestically at least here. You have the 2021 budget already in the hands of the Senate. What's your take on how things are faring so far when it comes to that? Would that be enough to actually propel a recovery from the pandemic? At the same time, we're talking about, recovering as well from the effects of not just Typhoon Raleigh, but the past 2-3 typhoons, in fact, that have entered the country, causing much damage. And we're talking about agriculture and infrastructure. So that would the 2021 budget be actually enough to help propel the country towards a recovery path?
Okay, I think we have to look at the budget in terms of in two ways. First is that will it provide relief to the much devastated economy, to the much devastated population during this pandemic, and even during the last storm. Next is will it lead to recovery? I'd like to think that I'd like to go back to the structure of our economy. Our economy is a consumer-driven economy, and right now, people do not have enough money. People do not have money in their pockets, and therefore, if they don't have any money, consumption really goes down. And I understand that there are some showings, there are some companies who are showing strong indicators for recovery, but I don't think that would be enough. I think we need to do more in terms of putting money in people's pockets. And that's by way of more jobs, by way of our own stimulus package. Until then, I'm not sure we can see a recovery for our economy. We need to have a good showing. Yes.
Sir, but compared to the second quarter, have we at least improved, given the fact that the latest inflation print, 2.5% for October, was higher than most economists have anticipated? This is actually a time where people are hoping for higher inflation. Does that actually not signal to you that consumption is picking up, albeit slowly? Should it be picking up more? And what is the catalyst for that to be happening, especially as we approach the December month?
I am not going to use inflation as an indicator of recovery. It could be used right now that inflation is picking up because there's not much enough supplies that the people can buy. Demand remains, but the supply is not enough, and that is why inflation is picking up. So I will take it with a grain of salt if we look at inflation as an indicator of anything right now.
Okay, and sir, how about monetary policy? That has been pulling its weight here during this period, and the idea is, the easing of interest rates at least, and even the triple R, allowing banks to lend and give to even property sector that's ailing, should spur consumption and should actually allow people to tap into more loans, and that loan should propel the economy. Are you satisfied with these policies, and do you see this having an effect right now, at least as we go towards the third and fourth quarters?
Partially, yes. I think monetary policy is a very strong instrument for the government to stimulate the economy. However, I go back to the main driver of the economy, which is consumption. If the people do not have money in their pockets, they will not consume. They will miss meals. They will forgo what they used to buy. And until then, that the consumer appetite picks up, the economy will have a very difficult time to recover.
Right, sir. And having said all that, how do you see us growing at least in the third and fourth quarter for the remainder of the year even, and how soon do you see recovery happening in 2021? Can you give us at least your projections when it comes to GDP, sir?
The 16.5% dive that we saw in our GDP growth rate is a very deep dive. I have not seen this in our history since we started recording the Philippine economic growth rates. So 16.5% will be a very, very strong challenge. I just wish that in the next few quarters that we pick up a little bit. And without the economy reopening, I don't think that will be a big possibility. However, we have to make sure that when we reopen, the healthcare protocols are observed. Because right now, we know that the economy is reopening not because COVID-19 infections is slowing down or has declined. It continues to increase, but we need to bring the economy back to life. And that is why we are reopening.
All right. Again, thank you very much for those insights. Great conversations with you, Sir Emmanuel Leyco, President of the Pamantasan ng Lungsod ng Maynila. Thank you, sir.
Thank you,
Thank
sir.
you very much. Thank you.
And that's the first look into the business day. Today is November 11. I'm Danie, Laurel.
Catch us again tomorrow at 9:30 a.m. I'm Jess Delos Santos. We are One News.
Check. Hi, Jem. Morning. This is Sean. They're wanting to do an audio check. Can you hear us?
Hi, ma'am. Good morning
Hi,
po.
morning.
Yes po, positive.